The following content has been generated with artificial intelligence under minimal human supervision. The data presented may contain errors or inaccuracies. The opinions expressed in this content do not necessarily reflect the vision, position, or values of Digi-all. We recommend verifying critical information with additional sources before making decisions based on this content.
Welcome to Digi-all Tech News. Today is Friday, February 6, 2026. I'm Kylie Brooks, and this is where technology becomes clear and engaging. Amazon announces a massive $200 billion investment in AI and robotics for this year, but investors aren't celebrating. OpenAI launches Frontier, a new enterprise platform designed to integrate AI agents across entire organizations. Anthropic's Claude Opus 4.6 update shakes up software stocks with enhanced office automation capabilities. Tech giants Amazon, Google, and Microsoft lose nearly $900 billion in market value as AI spending concerns spook investors. Cryptocurrency markets face a brutal sell-off, with Bitcoin dropping to its lowest level since November and $500 billion evaporating from the market. Let's start with Amazon's staggering investment announcement. Just yesterday, the company revealed plans to spend $200 billion on AI, robotics, semiconductors, and satellites in 2026. That's a huge jump from last year's $125 billion and well above Wall Street's expectations of $147 billion. CEO Andy Jassy says the company sees tremendous demand for its existing offerings and what he calls seminal opportunities in AI and related technologies. This news came just one day after Jeff Bezos, Amazon's founder and executive chair, laid off about a third of the Washington Post staff. The timing couldn't have been worse for Amazon's stock, which dropped nearly 9% in after-hours trading, wiping out $9 billion from Bezos' net worth. This is part of a broader trend where Amazon, Microsoft, Google, and Meta are collectively planning to spend over $630 billion on AI this year. Meanwhile, OpenAI is making a major push into the enterprise market with the launch of Frontier. This new platform is designed to be an intelligence layer that helps companies manage, deploy, and build AI agents across their organizations. What makes Frontier interesting is that it's not just for OpenAI's own agents. It works with agents from Google, Microsoft, Anthropic, and other third-party providers. Vijay Simo, OpenAI's CEO of applications, emphasized that they're not trying to build everything themselves, but rather working with the ecosystem. The platform connects siloed applications and data warehouses, giving agents what OpenAI calls a shared business context. This means agents can handle complex tasks, reason over data, and work with files in what they describe as an open execution environment. The platform is launching initially with select customers including Uber, State Farm, Intuit, and Thermo Fisher Scientific. OpenAI's CFO Sarah Fryer mentioned that enterprise customers currently make up 40% of their business, with expectations to reach 50% by the end of the year. In AI model news, Anthropic just released Claude Opus 4.6 yesterday, and it's causing quite a stir. The update significantly expands the context window from 200,000 to 1 million tokens, which means it can handle much larger and more complex queries. The model has improved reasoning capabilities, deciding when to think deeply versus when to respond quickly. In knowledge work benchmarks for finance and legal fields, it's outperforming OpenAI's GPT 5.2. One of the most interesting features is the preview integration with PowerPoint, allowing it to create slides that align with templates. For coding tasks, the work can be split across agent teams that mimic human collaboration. The announcement follows plugins for co-work that sparked fears of replacing specialized software, causing stocks of companies like Thomson Reuters and LegalZoom to plunge. The Nasdaq experienced its worst two-day tumble since April as investors grappled with concerns about AI disrupting traditional software businesses. The broader market reaction to AI spending has been brutal for tech giants. Amazon, Google, and Microsoft are collectively facing a potential loss of around $900 billion in market capitalization since their latest quarterly earnings reports. Despite strong revenue growth, the sheer magnitude of capital expenditures is overshadowing positive results. Amazon's shares dropped 11% after the spending announcement. Microsoft saw the sharpest decline at 18%, with investors concerned about its 66% surge in data center costs and heavy reliance on OpenAI, which accounts for 45% of its $625 billion cloud backlog. Alphabet's shares fell slightly despite surpassing $400 billion in annual revenue, due to plans to double capital expenditures to $185 billion. Meta initially gained 10%, but those gains evaporated amid a broader Nasdaq sell-off of 4%. Jim Tierney of AllianceBernstein described the expenditures as staggering. Interestingly, Apple bucked the trend with shares rising 7.5% on record quarterly revenue from iPhone 17 sales and a more restrained $12 billion annual capital expenditure plan. Finally, the cryptocurrency market is going through a tough period. On Wednesday, Bitcoin plunged to $72,877, its lowest level since November 2024, before partially recovering to $75,900. The total market capitalization has shed approximately $467.6 billion since late January, approaching a $500 billion loss. As of yesterday, Bitcoin was trading at $73,420, down nearly 4% over 24 hours. The decline is being driven by investor caution amid widespread liquidations, macroeconomic uncertainties, expectations of tighter monetary policy, and regulatory headwinds. Liquidations exceeded $700 million in one day, contributing to a staggering $6.6 billion since late January. Investor Michael Burry is highlighting risks of cascading financial stress, forecasting 15 to 20% losses for over-leveraged institutions like MicroStrategy if Bitcoin dips to $60,000 or $50,000. MicroStrategy's holdings of over 712,000 Bitcoin are now underwater by $630 million, below 76,000, though CEO Michael Saylor remains committed to further acquisitions. On a more positive note, US Treasury Secretary Scott Bessent confirmed Bitcoin's role in the strategic Bitcoin reserve, valued at over $15 billion from seized assets, though there are no intentions for open market purchases. As we can see, the technology sector is facing a moment of uncertainty as markets digest the scale of AI investments and their potential returns. From massive capital expenditures to market volatility across both tech stocks and cryptocurrencies, the landscape is shifting rapidly. We'll continue monitoring these developments as they unfold. Thank you for staying informed with Digi-all Tech News. We'll be back with more updates as they develop.